Today we're looking at a very interesting setup forming for NIO, and it's happening quietly, almost under the radar, as we head into the final hour of the trading week. Right now, NIO is trading around the $5.07 mark, up roughly 1.2% on the day. It opened the session at about $5.17, dipped early, and since then has been bobbing around that tight $5 range for most of the session. On the surface, this looks like a slow Friday. But when you zoom out, the behavior of the stock is telling a much more intriguing story. This isn't random noise. This is controlled price action. This is pressure building. And in markets, this kind of tightening often shows up just before a bigger move. The first thing that stands out is how calm NIO has been compared to the rest of the EV sector. XPeng has been choppy. Li Auto hasn't been able to hold intraday strength. Tesla has been trading in its own world with macro and options flow driving most of its volatility. NIO, by contrast, has been steady, almost unnaturally steady, and it's been doing that for days now. The $5 level, which has historically been a psychological ceiling and a place where traders expect rejection, is becoming something different. NIO is starting to treat $5 not as a place it fails, but as a place it stabilizes. That shift in behavior often signals accumulation. And accumulation, especially when it happens quietly, is something traders take very seriously. What makes this even more compelling is the fact that NIO did have every reason to sell off today. The early drop could have easily triggered a wave of stop losses. Shorts could have used the weakness to force a sharper push lower. The entire EV group wasn't particularly strong. But that didn't happen. Instead, buyers stepped in almost instantly. The dip was shallow, controlled, and bought. That's how institutions behave when they want to hold a stock in a tight range while they build a position. It's worth noting how the candles look today: low wick, low range, low emotion trading. That's not retail. That's not panic. That's a stock being guided. Short interest adds another layer to this story. Borrow fees remain elevated, and while shorts are still active, they haven't been able to push NIO anywhere meaningfully below that $5 handle this week. Earlier in the year, any weakness below 5 would often trigger a breakdown toward the mid-4s. That pattern is not happening anymore. Instead, the price keeps resetting higher. For a heavily shorted name, this kind of durability is a problem for bears. The longer NIO refuses to break down, the more tension builds. And when tension builds, pressure eventually releases in one direction or the other. But the structure we're seeing now suggests the risk is shifting toward the upside. Shorts aren't covering yet, but they're no longer in full control either. This is exactly how the early phase of a trend reversal often looks. Another factor working in NIO's favor today is the macro backdrop. Yields have softened slightly heading into the weekend, which usually gives tech and speculative names the breathing room they need to stabilize. There's also a rotation into risk assets happening beneath the surface, driven by expectations of a more accommodative stance as we head toward the end of the year. Even small shifts in macro tone can have an outsized effect on names like NIO, especially when sentiment has been depressed for months. When macro stops applying downward pressure, oversold stocks start behaving differently. They stop panicking. They stop bleeding. They start building foundations. And that's exactly what NIO appears to be doing as we head into the close. But the most important part of today's price action isn't the price itself. It's the behavior of the price. When you watch NIO closely, the character of the stock has changed. Earlier this year, the moment it showed strength, sellers would immediately appear. Today, strength is not being rejected. Weakness is not being exploited. Instead, we're seeing higher lows, tighter consolidation, and a quiet resilience that normally precedes a larger move. This is what traders call compression. And compression is not random. Compression means energy is being stored. When energy is stored, it eventually expands. Momentum indicators reflect the same story. They're flattening in a constructive way. RSI is no longer trapped in oversold territory. Volume is lower, but not in a bearish way, more in a waiting way. When a stock starts grinding upward with smaller candles and calmer reactions, it indicates that emotional sellers are out, weak hands have been shaken, and the float is transitioning into stronger hands. That typically leads to a more stable platform for the next leg, whether that comes next week or later in December. Now, this isn't happening in a vacuum. NIO's broader storyline is evolving in ways that support this quiet shift. The company's pivot toward in-house autonomous driving chips has become a major structural advantage. Investors who understand the long-term value of vertical integration see this as more than a product update. It's a business model update. Meanwhile, NIO is preparing for its next SUV cycle, which historically has given the company meaningful delivery boosts. And with the Chinese EV market moving toward consolidation, stronger brands often benefit as weaker competitors struggle. All of this provides the fundamental fuel behind the technical picture we're seeing right now. If you put the pieces together, the stabilization above $5, the refusal to break down, the controlled trading behavior, the accumulation signals, the short tension, the macro breathing room, and a pipeline of real catalysts, you get a picture that suggests NIO isn't drifting. It's coiling. And coiling behavior is something traders pay very close attention to because it often marks the transition from bottoming to reversal. So the real question today isn't why is NIO up a few cents? The real question is why is NIO acting so calm? Calm markets are not unimportant markets. Calm markets are often structural markets. They're the markets where smart money positions itself before volatility returns. And with an hour left in the trading week, NIO is sending a message, not loudly, not with big volume, but quietly. The message is that something is building. It may not play out today. It may not play out on Monday. But price patterns like this rarely persist without eventually resolving. As we head into the weekend, traders will be watching to see whether NIO holds this $5 region into the close. Even if it doesn't close exactly at 5.07, the fact that it has spent most of the day defending $5 again is meaningful. If this level becomes a new launch pad instead of a ceiling, the psychology of the stock changes. And when the psychology changes, the trend can follow. What we're seeing right now is the early stage of that process. Quiet strength is still strength. And sometimes quiet strength is the most important kind. If NIO begins next week with even modest momentum, we could see this tight coil break to the upside, especially if volume returns. But even if the move takes time, today's session reinforces one idea. NIO is not behaving like a stock that wants to go lower. It's behaving like a stock waiting for its moment. And when stocks wait like this, something is usually coming. For now, NIO is holding its ground, building its base, and telling us, quietly, that the next chapter may be closer than many think.